Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Qualified business income, or QBI, deductions are a significant tax break for many American small business owners. This deduction was created by the Tax Cuts and Jobs Act of 2017. It aims to provide a tax benefit to owners of pass-through entities. This helps balance the tax cuts given to C corporations. It allows eligible self-employed individuals and small business owners to deduct up to 20% of their qualified business income. This applies to sole proprietorships. It also applies to partnerships. S corporations are included. Limited liability companies, or LLCs, taxed as one of these also qualify. The deduction is taken on your personal tax return. It is an above-the-line deduction. This means it reduces your adjusted gross income, or AGI. The maximum deduction is 20% of your qualified business income. However, it cannot exceed 20% of your taxable income before the QBI deduction itself. It also excludes any net capital gains. There are important income limitations. These limitations depend on your total taxable income for the year. For the 2023 tax year, if your taxable income is below $182,100 for single filers, $364,200 for joint filers, the deduction is relatively straightforward. You generally get the 20% QBI deduction without complex phase-ins. Once your taxable income goes above these thresholds, the rules become more complex. The deduction may be limited. These limits involve the W-2 wages paid by your business. They also consider the unadjusted basis of qualified property held by the business. This includes things like machinery, equipment, and buildings. There's another layer of complexity for certain professions. These are called specified service trades or businesses, or SSTBs. SSTBs include fields like health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, and brokerage services. If your business is an SSTB, your QBI deduction might be limited or even phased out completely. This depends on your taxable income. For 2023, if your taxable income is between $182,100 and $232,100 for single filers, $364,200 and $464,200 for joint filers, the SSTB limitations begin to apply. If your taxable income exceeds $232,100 single, $464,200 joint, you generally cannot claim the QBI deduction for an SSTB. It's important to note that engineering and architecture businesses are specifically excluded from the SSTB definition. This means they can claim the deduction even at higher income levels, subject to the W-2 wage and property limitations. The QBI deduction is a complex area of tax law. It does not reduce your self-employment taxes. It only reduces your income tax liability. Many factors can affect your eligibility and the final deduction amount. These include your business structure, your total income, and the type of services you provide. Keeping accurate records is crucial. Understanding these rules can save you a lot of money. However, navigating them often requires professional help. It is always wise to consult with a qualified tax advisor. They can help you determine your eligibility. They can also ensure you maximize this valuable tax benefit. Thank you for watching this explanation of qualified business income deductions. We hope this helped clarify a complex topic. If you found this information useful, please give this video a thumbs up. Don't forget to subscribe to our channel for more helpful financial tips and tax insights.